Episode 3. Documentary Collections. The Middle Ground in Trade Finance. International trade is not only about shipping goods. It is about managing risk between buyer and seller. So what happens when neither side fully trusts the other, but both still want to trade? Northbridge sample exporters ships goods to Harborview sample importers. They don't want full bank involvement like a letter of credit. But open account feels too risky. They choose documentary collection. What governs it? Documentary collections are usually handled under URC 522. URC 522 stands for Uniform Rules for Collections. Issued by the International Chamber of Commerce, ICC. It defines how banks must handle collections globally. What URC 522 says. Under URC 522, Article 4, banks act only as intermediaries following collection instructions. They do not provide a payment undertaking unless separately agreed, e.g., avalization. This is critical. Important clarification. Banks do not examine documents for discrepancies, guarantee payment or become responsible for the commercial contract. They simply handle documents according to instructions. Compliance reminder. However, banks must still perform sanction screening, AML checks, regulatory compliance review. Operational handling under URC 522 is different from regulatory obligations. DP. Documents against payment. In DP, the bank releases shipping documents only after payment is made. No payment, no documents. The bank does not check document accuracy. It only follows instructions. Risk remains between buyer and seller. What if buyer refuses? If Harborview refuses to pay, the bank has no obligation to pay Northbridge. The goods may remain at destination and exporter faces commercial risk. D.A. Documents against acceptance. In D.A., documents are released against acceptance of a bill of exchange. The buyer signs the draft, promising to pay at a future maturity date. Exporter takes credit risk. What is avalization? If the collecting bank agrees to avalize the draft, the bank adds its own undertaking to pay at maturity. This changes the risk profile. Now the risk shifts from buyer credit risk to bank credit risk, subject to internal credit approval. Clean collection. In clean collection, only a financial instrument moves through banks. No shipping documents are controlled. Used when trust already exists. Higher reliance on buyer performance. Positioning collections. Documentary collections sit between open account and letters of credit. Lower cost than letters of credit. More structure than open account. But no automatic bank payment undertaking. Closing thought. Under URC 522, banks facilitate. They do not secure payment unless an independent undertaking is added. Follow for next episode. What happens when shipment is delayed and market prices move? Walk with me through 3 decades in trade finance, from the basics to real stories.